Welcome participants. Today we will discuss various definitions as given under the Income Tax Act 1961. These definitions are very much necessary to understand the income tax laws and when we will proceed in this particular course further. So make yourself clear about the concepts which we will be discussing now. To begin with, let me start with the concept called assessment year and previous year. Now, what is the difference between these two terms? These terms we will be using colloquially and very frequently while discussing various provisions of income tax laws. Previous year is the year in which the assessee earns his or her income. Assessment year is the year in which income tax department assesses or evaluates the tax to be paid by the taxpayer. For example, the current year 2018-19 is the previous year that a person earns his or her income during this particular year. The income tax department will not disturb the person during the current year to pay or to charge income tax in this particular year, but they will evaluate and assess the tax once this particular year is over. For example, the financial year 2018-19, it starts from 1st April 2018 and ends on 31st March 2019. A person earns his or her income during this particular year. We can say this is the previous year. The next year, which starts from 1st of April 2019 and ends with 31st March 2020, in this year the income tax department will calculate the tax to be paid by the taxpayer on the income earned by him or her during 2018-19. We can say that assessment year follows the previous year. To again repeat, previous year is the year in which the person earns his or her income, and the assessment year is the year in which the income tax department evaluates, calculates the tax to be paid by the taxpayer on the income earned during the previous year. Normally, the previous year is the financial year, that the year starts from 1st of April and ends on 31st March. But in case of a broken year, like a business has started on 15th of August, in that case the previous year will be 15th of August 2018 and will end on 31st March 2019. There was a rationalization in income tax laws, and now all previous year must end on 31st March of each year. Suppose a business is started on 31st March itself, then for that particular year the previous year will be only for one day, that is 31st March 2018 to 31st March 2018, and from the next year it will follow the complete financial year. This is the assessment year and previous year. So normally, as I told you, that income tax department does not disturb the taxpayer during the previous year. They will assess, evaluate the tax only once the previous year ends. So income is earned in year 1, assessed to tax only after completion of year 1, that is in the next year, year 2. The year 1 is known as the previous year and year 2 is known as the assessment year. This is the general rule, but there are exceptions to this general rule. I can cite 5 cases, 5 examples where the assessment year is same as the previous year. That is, the income tax department will not wait to get the year 1 end and then calculate. They will calculate and demand the tax from the taxpayer in the very year in which the income is earned. Case number 1, we refer to section 172, shipping business income of non-resident ship owners who do not have any representative in India. In that case, the income tax will be charged in the very year in which the income tax is earned. If the income tax department has the knowledge that some persons are leaving India for good with no intention to come back to India, in that case the previous year and assessment year will be the same. Assessment of association of persons, body of individual or any artificial juridical person which is formed or established only for a limited period, then also the previous year and assessment year will be the same one. In case of persons who are likely to transfer their asset to avoid tax, they are also liable to pay income tax on the very year of income. And lastly, in case of discontinued business, the previous year and assessment year will be the same. Except these 5 situations, normally the income earned by the assessee in year 1 is assessed to tax or subject to tax in year 2. This is the definition of assessment year and previous year. Now, in my discussion just now, I was using the word called persons. Now, Income Tax Act has defined the word persons in detail. The Income Tax Act says that income tax is payable by a person. Now, the question is, who is a person? Section 2 subsection 31 of the Income Tax Act defines a person. It includes an individual, which normally we are here, a Hindu undivided family, HUF. HUF is a special entity created by Hindu law where the head of the family is known as Karta and the other members are co-personers. So, Hindu undivided family is an entity of under Income Tax Act. So, income tax file can be maintained in the name of Hindu undivided family. Thirdly, a company. A company is registered under the Companies Act 2013. A firm, that is a partnership firm, whether it is a partnership firm or a limited liability partnership. Next, an association of persons or body of individual. Then a local authority like municipality, board or corporation. And lastly, every artificial juridical person not falling in any of the groups which I have just now mentioned. This is so broad that the deity also falls under this particular definition. So, we can say that all kinds of entity are subject to pay income tax because section 2 subsection 31 is a broad one which involves or which takes into its purview all kinds of entities. Next important definition or the term which I have been using now is assessee. Now, who is an assessee? Section 2 subsection 7 of the Income Tax Act defines a person by whom any tax or any other sum of money is payable under the Act. We have different kinds of assessees. The first category of assessee, just now I have told that a person by whom any tax or any sum of money is payable under the Act. Second category of assessee includes any person against whom any proceedings is going on under any court of law. That person may not be liable to pay income tax, but income tax related proceedings is or are going on in any court of law, then also that person will be regarded as assessee. Third category is known as representative assessee. That is, these persons are liable for somebody else's income, like the legal representative of a deceased, guardian of a minor. These are the persons who are liable to pay income tax on behalf of some other persons. So, they are known as representative assessee. The fourth category is known as assessee in default. These are the persons who need not pay income tax as per their individual capacity is concerned, but because they are given certain duties, if they fail to comply with that duty or perform the duty, if they default in doing the duty, they will become the assessee under the Income Tax Act. Suppose a particular DDO or finance officer or an accountant is given the duty to deduct tax from salaries of employees every month. Now, if the person who is given that particular responsibility is deducting income tax from the salary of his or their employees regularly as per income tax law and deposits that particular money into the government treasury, then he or she is performing his or her duty perfectly. Now, what happens if that particular person has not deducted income tax while he or she paid the salary to the employees of the organization, or having deducted the amount, they have not deposited the money to the government exchequer? In that case, they are in default of their respective duties. The income tax department will not run after the hundreds of employees who work in that organization. They will make that particular accountant or the DDO as responsible for the income tax. Then that particular accountant or that particular officer will become assessee, and technically we call them as assessee in default. Thus, we get the four categories of assessees. May I repeat? The first category is the person by whom any tax or any other sum of money is payable under the Act. Second category is that against such kind of persons some proceedings are going on in the court of law. Third is that the representative assessees, that these persons are liable to pay tax on behalf of some other person. And fourthly, assessee in default, that these persons are actually not assessees, but they will become assessee if they default in performing their respective duties. Next important definition is income, which is a very, very important one as far as the income tax is concerned, because income tax is charged on the income of a person. Section 2 subsection 24 defines the term income, and this definition is inclusive and not exclusive. Some features of this income are: there must be some definite and regular source. There are different forms of income. The Income Tax Act recognizes an income either receipt or accrual basis, whichever is earlier. There is an interesting concept that legal versus illegal income. Income Tax Act does not bother about whether the income is legal or illegal. An illegal income is also subject to income tax. Regarding the legality or illegality, other acts are there where that particular persons will be prosecuted, but income tax is charged on the illegal income also. In case of disputed title, again the income tax is not bothered that who is the legal owner of that particular title. Income tax will be charged on the person who is recipient of the income at the moment. Income Tax Act also takes into consideration relief or reimbursement of expenses that they are not regarded as income. So the income tax under the definition or under section 2 subsection 24 takes into consideration various aspects, and there are many litigations, court cases, verdicts by the honorable courts, and accordingly the definition has become inclusive one. Now let us see that there are certain heads of income on which income tax is chargeable. Income Tax Act recognizes 5 heads of income. A person may earn his or her income from various sources, but any income must come under any of the 5 heads. These heads, the number one, first one includes income from salaries. The persons who are in employment get salaries. So Income Tax Act makes a separate provisions for income from salaries. Second head of income is income from house property. Those people who own houses or house properties and earn their income by way of rent from these properties, it will fall under the second head of income, income from house properties. Third one is the broad one with income from business or profession. That is, the various sections are there for computation of income for business or profession. Next head is capital gains. That is, a person may earn his or her income by selling capital assets or by selling shares, debentures, etc. So any kind of gains or losses which occur for such transactions, they will come under computation of income tax under the head capital gains. And lastly, income from other sources. A person can earn income by way of interest on deposits put in different banks, dividend from shares, lotteries, crossword puzzles, etc. So the last head is a broad one which talks about income from other sources. So these are the 5 heads of income on which income tax is charged. I repeat, number 1, it is income from salaries. Number 2, it is income from house property. Number 3, it is business or profession. Number 4, it's capital gains. And number 5, other sources. Now, there is a concept called total income. The total income of an assessee is the gross total income as reduced by the amount deductible under sections 80C to 80U. When we add up all these 5 heads, that is salaries, house property, business profession, capital gains, other sources, when we add up with the summation is known as gross total income. From this gross total income, there are various deductions as provided under the Income Tax Act, mostly under section 80C to 80U. When these deductions are deducted from gross total income, we get the total income. And this is the total income on which income tax is chargeable. In our next discussion, we will be discussing how to calculate tax on various heads of income. Thank you.